We talk about opposing forces at play. There is some recent excitement in IT, and should it be justified? So maybe that. And well, Alex, what else? I mean, we're talking about, I wanted to keep my piece hidden maybe.
It's not going to be hidden for very long, Neeraj. So let's talk about that, right? Unprecedented is the word that has been used recently to describe the run-up in some of the PSU stocks. And of course, Neeraj and Samina as well as Tamanna talking about some of these stocks even in Indian Open or Indian Market Open. We're going to talk about why, both on fundamental reasons as well as historical reasons, maybe, just maybe, that rally is far from over. On the other side, there were some positive signs in the Indian IT pack on the earnings front in the third quarter, but just maybe there's a few more bumps in the road for them to navigate. At least that's what the Cognizant numbers seems to suggest. We'll talk about what Cognizant is saying and what to read from the Indian IT pack. But let's start with the PSU banks.
Okay.
Not PSU banks, but the PSU pack.
In fact, we're doing everything but PS public sector banks.
Slip of the tongue.
No problem.
No, because we've had a lot of comments about this, and the Prime Minister himself standing in Parliament and talking about how these companies have performed on the fundamentals. He didn't very much talk about the stock price. He did, of course, but he focused more on the earnings. Why do you suggest that the rally may be far from over?
No, so two things. One, I'm not suggesting the rally may be far from over, but putting numbers into perspective. Sure. But just Alex, as a rewind, who are mere mortals like you and me and Tushar to speak about public sector banks when on a day of the policy, the one index that stood out was public sector banks. Somehow everybody seems to be buying them. But, you know, here's the deal. So we took a look at the PSE ETF, the price to book of the PSE ETF over the last 10 years. And if you see the last 10-year chart, you will feel that the index has veered back to levels which were historical highs, and therefore, is this now a peak? But if you look at the last 15 years or 20 years, you will see that the price to book valuation have actually exceeded the current levels as well. So if you take a really long-term view, you might feel that, hey, maybe, just maybe, the rally is not over as yet, because if you pay attention to historical and valuations, and history may not repeat, but it often rhymes.
Yes.
You might feel that, hey, you know, maybe there is more in store. So this is just it's saying that if you look at 10-year history, and so many people say that 10 saal ke level pe aa gaya. But that is not the whole story.
They also say that you can torture the numbers and the statistics to say what you want.
Exactly. So I just did that. Now, I just did that, right? Now, some highlights for companies. This is not exhaustive list, but here's the deal. I mean, BPCL trading at net debt levels of less than 7,000 crores, the lowest in history, according to my mind. It's the highest two-quarter cumulative EBITDA for REC in the longest time, if not the history. So they are doing well. So this is power finance now, PSUs, doing very well. You look at defense, the production will scale to all-time high levels of 1.5 trillion rupees in FY24. By the way, just for information, exports have reached about 16,000 crores in FY23, which is a 10x jump from FY17. Defense, largely dominated by PSUs. There are some private players, but largely PSUs. And four, value of the PSU investments in LIC's book. You know, Chinmay, our colleague, is going to do a piece on that later on in the day, today or tomorrow. But what's the uptick that has come into the investment book for LIC by virtue of all the investments that it holds over a 6-month or a 12-month period? Fascinating piece, I'm sure. So there are some companies which have got these fundamentally strong highlights to back the move that has happened, okay? And then we take a look at the history, Alex, as you were referring to. So, you know, price to book or price to earnings versus a 10-year average, just to understand whether these are completely out of whack or no. Now, you look at some part of these companies, and if you look at price to earnings, what are we pulling up first? Price to book or price to earnings?
I think we should pull up price to book.
Price to book? Okay, if you look at price to book, in case of BHEL, way over 10-year averages. In some cases like Bharat Petroleum, maybe not so. In case of Bharat Electronics, certainly so. In case of Hindustan Aeronautics, certainly so. So price to book in certain cases looks out of sync completely. Similarly, on a price to earnings basis as well, some of these companies, BHEL, BPCL, HAL, etc., seem completely out of whack. I mean, you know, BHEL, if you look at the price to earnings, 171 times versus a 10-year average of 53 times. I mean, out of whack completely, right? Bharat Petroleum, 62. You don't value BPCL as, you know, price to earnings, but I'm just referring it as a point to make, or a Bharat Electronics, etc. But there are some which are not so expensive as well, right? So look at ONGC, Oil India or Coal India, price to book versus 10-year averages, or price to earnings versus 10-year averages. These companies don't look all that expensive also. So within an overheated pocket, there are pockets of strength. And by the way, why power finances look expensive, I'll just take a minute more. Some of the people are still very constructive on the power financiers as well. So stocks like PFC, REC continue to find favor. Samit Vartak mentioned this. I think Sridhar Shivram probably mentioned this as well. So there are people who are takers for these companies because of the kind of growth that might come in. So that's to be kept in mind. And frankly, you know, while some of these rallies overdone, so you could argue looking at history, that public sector banks have run their course, because if you look at 1 year, 3 year, 5 year, public sector banks have far outstripped the gains in the private sector banks. So people could argue that maybe there's a turn coming in. The valuations for public sector banks are still maybe at times 1 times book, 1.2 times book. Yeah. So, you know, who's to say what could happen? But within this overheated pocket, and yes, some of the parts of the PSUs are overheated, there are some which fundamentally based on earnings growth might still have room to
Speaking of earnings growth and speaking of PSUs, LIC, of course, and you discussed this at the start.
Samina spoke about it, yes.
It was phenomenal yesterday, right? 49%.
Yes, and we haven't even gone down to mark to market some of the investments that they have. So just the point, I mean, you know, in some cases you can't reach a conclusion. It's one of those cases, but the conclusion is, Alex, that yes, the space is overheated, but there are some pockets. If you look at history, it's definitely overheated, but history may not be the right indicator of what is in store in the future for some of the PSUs.
Because as it has been pointed out also, the fundamentals are far different than they have been in the past. Okay, so let's quickly shift gears and speak about the IT space as well. I think for a long time we've been trying to gaze into FY25 and see when the bumpy landing for the US would take place. You know, now we're arguing that perhaps it's not going to be such a bumpy landing, but we're still seeing Cognizant's guidance not very pleasant, Tushar.
Yeah, so what the Indian IT pack has seen over the last 1 week is a push and pull as far as commentary is concerned. So early in the week, we had HSBC coming out with a note saying that, okay, the trends that we are seeing, the outlook is not that bad. It may be good for the top 4 companies. Now, a peer to those top 4 companies comes out with the earnings saying that we are guiding for a negative -2 to +2% growth, with the CEO saying, and I must quote, our guidance range is broader from -2 to +2 because we do not know what we do not know. So that clearly underlines that how hazy that picture is at this point of time. So again, which is why your stocks react. He goes on to say, but our thesis is very simple. We are going to be prepared for a comeback in discretionary. Again, that picture on discretionary is not clear. So if you look at Cognizant numbers, revenues are down for the fourth quarter at 1.7%. Net profit is up 7%. Margins up 190 basis points. So the numbers are okay, but they are still guiding for about -1.8 to 2.2% decline, in 2024. Jan March is seen at about declining 2.7 to 1.2%.
Sure.
So what these two actually, HSBC and Cognizant actually agree on is the fact that discretionary spending is still absent. It's not coming back anytime soon.
Got it.
Near term,
when it comes in is an unknown, right? So therefore, you're preparing for the best. You're preparing for the best, but you're guiding for the worst.
So
I guess that
HSBC's, I think the sense comes from the fact that these are fundamentally sound companies. So when it does come back, they will be at the forefront of making the most of it. Which is fair.
But Tushar, I have a question, sorry. Just one quick minute. Q3 IT results, they were disappointing, right?
For India, again, it depends on what you're looking at. If you're looking at the top tier, the situation is, if the situation has not gotten worse, it's okay. Because the expectations themselves were not that high from these companies, given the seasonal weakness that we see in Q3. So the numbers themselves were not that expectation that were not high. So when a TCS or an Infosys meet these expectations, they're like very happy, you know. So that at least this is happening. Situation hasn't gotten worse. But what investors should also realize that for the entire year, we are still looking at discretionary spending not coming back. So against that backdrop, how do you sustain your margins that you have actually sustained in a very rough 2023? The second thing to watch out for is how do you convert the large deals into revenue. So that is the
Which has not been taking
Which
place.
has not been taking place. It's not meaningfully reflecting in revenue numbers.
So I guess caution is to be
Is warranted.
advocated.
It's warranted.
And pay attention to the unknown unknowns, as Cognizant has said. And I think that brings us to the end of this particular edition of the Editor's Cut. Let us know what you think about it in the comment section or on any one of our social media platforms. And do stay tuned.